things have really changed. The numbers may not reflect that, so let's take a quick look at them, and then I'm going to tell you a little bit more about what's happening on the street. Hi everyone, this is Christine Kopr, Senior Vice President of Sales with Sotheby's Realty Canada in Vancouver, BC, and today we're going to talk about the January numbers that came out and what's happening in the market. Because really, if we only spoke about the market in January or at the very end of January, it would have seemed very dismal. Okay, as you know, every month I like to go through the numbers that are the key numbers about what's happening in the marketplace to give you an idea of the trend. Every market, every product behaves a bit differently. However, the overall trend is really important because it gives you a tone of what's happening. And definitely we're starting to feel different trends happening across the market. Now, you're probably wondering, why do I have the real estate board for Greater Vancouver 2022 up in front of me? Well, with January numbers in, we only have January to look at with nothing else to compare to. So I just want to give you a recap of how the year ended. December coming in at some of the lowest sales that we had seen on a 10-year average, down to 38% below the 10-year average and down 52% year over year. Now, coming into January, we're still seeing that trend. However, the bottom may have come in. If you can see in December, we had sales that were just under 1,300, which were the lowest of the year for 2022. We had very low inventory. However, with respect to the amount of sales that we had and the amount of inventory, we're sitting at about 5.7 months of inventory. Now, for those of you that follow me, you know that I always look at the months of inventory because it is an indicator as to where prices are going. Between 4 and 6 months is a balanced market. Below 4 months and below is considered a seller's market. There's not as many months of inventory available for the amount of demand. Think about Tesla and their car prices. Not enough Teslas, prices went up. Now there's more inventory because they're into full production, prices have come down. So it's the same thing. Over 6 months of inventory in real estate, and we're looking at a buyer's market. There is more inventory than there is demand. And you could see coming in at the end of the year, we went from having almost no inventory, so below 4 months, and in fact, only less than 2 months of inventory, which had positive impact on prices. It was pushing prices up. Now, as rates went up across the year, you can see that since interest rates started to increase last year, there was a negative pressure on prices as indicated by the red color here on price. And this is the benchmark price. So we ended off at the year about 6 months of inventory, prices were coming down and sales were slowing. And if you've been following me, you know that I have been predicting that this trend is just going to continue. We were already headed into buyer's market territory. You know, finally buyers are able to actually negotiate a great price. They were negotiate terms, negotiate subjects. It was a lot of more like doom and gloom and not knowing where prices were going to go, especially because no one really knew when the Bank of Canada was going to stop raising interest rates. And if you have been following me, one of the things I've been talking about with my clients is that I predicted that the second the Bank of Canada started to talk about easing interest rates or just stopping, the psychology of the market was going to shift. And I think we're starting to see that. Now, January numbers, how did they compare to December of last year? Well, guess what? January was pretty dismal. We only did 1,022 sales. That's down 21% month over month and down 55% year over year in terms of the sales done in January of last year. But this month over month decrease is actually about the same for December. So it feels like a bit of a flattening out in that sort of things in terms of the amount of sales, the amount of people buying homes. New listings, we were up. This is a mistake. Pardon me. We are up month over month, 173%. More listings came on the market in January, but we were down 21% year over year. So not a ton of new listings, obviously up month over month from December. Nobody wanted to list in December. It was a terrible time. And it was reflected in the market activity at that time as well. Total listings. So now the new listings came on January, but how many listings did we have in total? And we're just sitting there at 7.3 months of inventory. So it was up 32% over this time last year in terms of January's inventory. but still it's very, very tight inventory out there right now. And that's what's leading to this current shift in the market that's not reflected in these numbers. And clearly so, like here we have months of inventory sitting at 7.3. As I suspected, the amount of demand was anemic in terms of the amount of sales compared to our 10-year average. It's very low sales. However, I can tell you, being in the market, being in the trenches every day with our listings, with our buyers, the phone calls started picking up after January. It was like feeling bad, like it was not looking good. Sales were really low, like nothing was happening. The inventory is there, but not a lot of sales. So not a lot of people hoping to buy real estate, and there was pressure on prices. And then of course, December was really cold and we actually had snowstorms. And I think between that and Christmas and everything, the marketplace was just not into real estate. However, it was very curious in January, about January 10th, the phone started to ring. And while I know I'm supposed to be reporting on January numbers and the benchmark price is still lower than it was back at the end of the year, went from 1.114 to 1.111, it really is starting to feel like perhaps the floor is coming in. Now, we don't know for sure where things are headed, but I think with the last rate increase at the end of January and the Bank of Canada expressing that now they're actually going to hold the line and see how these interest rate increases are impacting the market, has given the market a psychology of relief. There's no more fear that they're going to be increasing these rates month after month after month and potentially going to 18% interest rates. So I think that's given the market some confidence, like, okay, here we are, we're flattening out. This is bearable for now, with obviously a renewed optimism that eventually the interest rates are going to come down when inflation comes into line. And the second thing that we saw was the bond market was actually predicting that 5-year fixed term rates were going to come down, because while the Bank of Canada had increased the interest rate at the end of January, that's the prime rate, which really only impacts variable rate mortgages. So those rates have gone up. So if you've had a variable rate mortgage, you're feeling the impact, or a home line of credit. However, the prime rate doesn't impact the 5-year fixed term rate or the 3-year fixed term rate. The bond market does. And the bond market started to ease off. In fact, at the end of January and early February here, we have been hearing about clients being able to secure mortgages sub 5% for principal residences. So, you're seeing 4.6, 4.8 on a 5-year is actually not that bad. Way different than your 6 to 7% in some cases, depending on where you are with a variable rate mortgage. So that is a lot more palatable and much more realistic. 3 to 5% interest rates are totally normal historically. Remember, we were very, very, very spoiled for 2 years with sub 2% interest rates. It was crazy. So the confidence in interest rates not getting any higher or going any higher for now and potentially not moving forward. A lower 5-year fixed rate for anybody who wants to secure a home right now is great, and it's a security for the next 5 years, with probably a strong chance of having even lower interest rates in the next 2 to 3 years, is good for buyers. And then the third thing is that nobody wants to sell in this market. So we have a bunch of sellers out there potentially who don't want to sell because there is no reason to sell in this market. It's not favorable for sellers and it's not a great price. And so then we've had this lack of inventory. And wow, is it showing up in the market? In the last 2 or 3 weeks, I have been in multiple offer situations and properties selling like that. In fact, I listed 2 properties, and on one of them, I got an offer the first night. And on the second one, we got multiple offers within days. So any product that is listed, shows well, priced right now, is getting crazy demand. We've had probably over 25 to 35 groups through our open houses and tons of demand and activity. And that's mainly on the new listings that are priced well. And then you've got the older inventory sitting out there at unrealistic prices, not moving, or perhaps it's just not a favorable product. So if you're in the buying space right now, it's actually becoming a very active and interesting market. You have to be prepared and you have to move fast. So if you're just in the beginning, please, please, please speak to your mortgage broker, get your pre-approval and get organized, because there are still deals to be had. It's just moving faster and you have to be ready. Prices are great. We've come off the peak and you know that you're getting into what's probably going to be a bit of a floor here in terms of prices. If you're a seller and you're thinking about coming on in the spring market, I don't know if you want to wait for another month, because what's the point in coming on with all that other extra inventory for everybody that wants to sell when the flowers are out? You know, that is the one word of caution, is that we'll see what happens here in the spring market. If there's a lot of inventory, more than we need for the amount of sales that we are currently having come on, then that will temper things and continue to potentially put soft downward pressure on pricing. And perhaps we might just get enough inventory to satiate the demand and smooth things down a little bit, because we are starting to see smart buyers are getting in before the open houses and trying to make offers. And in fact, we're already starting to see offer dates coming out on properties where there's just been way too much activity. So it's a moving market. I welcome the opportunity to connect with you. If you're thinking about buying, if you're thinking about selling, you need to be set up and you need to have an awesome team who knows how to navigate this market. We've had a couple of awesome success stories, particularly with our sellers and with our buyers, locking down some awesome deals. So please reach out to me with any questions you may have. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. If you're not seeing this in your inbox, then please make sure you subscribe to my email newsletter so that you can get these videos. Either there's going to be a link in my bio or there'll be a link below in this post. I look forward to connecting with you. Bye for now.